Hi, everybody. Bill Noble here for another episode of Quant Insights, where we're going to talk indices and trading the Token Metrics indices. I'm joined by Quant Master Jad. Jad, welcome to the show.
Thank you, Bill. Excited to be here today.
All right, let's begin with, what's a Token Metrics index and how do you trade it? So I'm going to share screen and I'm going to pull up, a Token Metrics Coinbase index. So this is a daily index, and why don't you just tell us, what's in the index? Why is it 30% Bitcoin? And, when you have a daily index, what does that mean? Does that mean it's just for today or 9 to 5, or what's the scheduling and all that? Tell us about the daily indices.
All right. So the indices that are on our website now is essentially a custom portfolio that is using a specific asset allocation model. And when I say asset allocation, it's just essentially a portfolio construction model that is trying to tell you how much weight to put in each coin based on a lot of different data points that we're using at Token Metrics, and mainly the TM grade, some diversification, and things like that. So when we say daily indices, it means that every day this index will be rebalancing. And when I say rebalancing, is that independently from what happened yesterday, it's going to look at this morning, and then it's going to pick 5 coins with their specific weights that our AI models are giving us. So every single day in the morning, US time, these indices will change and pick the new portfolio that is the best to be holding at this specific date. And another important part of this daily rebalancing schedule, if you'd like, is that it's a good risk management tool, because since every single day you are reevaluating your positions, you are selling out from the coins that are going outside the indices, and you're buying new coins coming into the indices. So that already is a very good risk management technique, because if a coin ends up not doing extremely well, the next day it will most likely be outside the index. So you will be able to sell it and reduce your loss. So it's a good risk management tool. The trade-off is that you will be trading every single day. So you need to sign in. And you can also, if you're part of tokenmetrics.com, you can set an alert that is telling you what are the new coins in an index, what coins got out of the index. But you will have to do it manually every single day. And the trade-off is that, first of all, you're going to spend some time doing the rebalancing. And second, you're going to be paying a little bit more transaction fees, because every single day you're trading, compared to a monthly rebalancing where you're trading only once a month. So you'll be paying less fees. But the trade-off, I think, is important, especially for risk management purposes.
All right. Well, since we're not trading on a decentralized exchange, I remember when it was the heyday of the DEX, right? That, transaction fees were so high you couldn't do this, but this is actually more doable these days on places like, your Coinbase, your KuCoin, and your Kraken, because you're obviously not paying gas fees. So when you trade these daily indices yourselves, obviously if you buy something, if you have like a Zilliqa or a Solana where it shows up day after day, right? That's bullish, right? Because you and I have seen that. Okay. But let's talk about pain. As we're recording this, the market is just dumping. So, what's the worst case scenario on these daily indices, right? Like, have you seen like one coin go up and one coin go down? Or, when you see the whole market dump, do you actually leave it and change it out the next day? Like, tell us how you manage that.
Yeah. So yeah, very good point. So me, the way I manage it, since the backtests of these indices are showing very good historical results, I want to be able to trade them without any type of emotional aspect to them. So basically, I want to follow them every single day, and knowing and being okay with that. In bull markets, you're going to have green days, but you're also going to have red days. And in bear markets, you're going to have red days and green days. And what I've been noticing, like you said, is usually when a coin keeps being in our index day after day after day, it really shows strength in that coin. And that's one of the biggest signals that, okay, like this is a good coin to buy. For example, Solana, it happened earlier this last year, and it also happened this year, where at a little bit below $100, it started being picked every single day, all the way up to 135. So me personally, because I was trading the indices, I had Solana as my biggest holding. And as of this morning, my biggest holding was down around 9 to 8%. I didn't really put a stop loss on it because I know that every day I'm going to reevaluate my position and change it. So I didn't put a stop loss on Solana. But as of this morning, I logged in, saw the indices, and saw this huge allocation to Bitcoin. So I ended up selling over 50% of my Solana position and putting it into Bitcoin to increase my Bitcoin position.
Right, because I noticed Coinbase is actually showing a huge allocation to Bitcoin, and I'm actually wondering if that's the AI's new version of defensive, right? So speaking of defensive, so that's like on the way up. Let's talk about this all exchange index, which, shockingly wants to invest in Microsoft, Bitcoin, and QQQ. So it's a little bit nauseating because I love to hate equities, but talk to us about how that daily index of the all exchange, we've seen it move to cash. Like, talk about when you've seen it move to cash. And even today, I mean, stocks were down 1%, but most altcoins were down 10%. So, this thing's got the ability to be offensive and defensive. Can you talk about that?
Yeah, definitely. So I remember very well, and I think all of our customers at Token Metrics remember that during November, December, when we had a really big period of drawdowns, first thing we saw is that, okay, we were getting a very big allocation to the big coins, like most notably Bitcoin, because in the crypto space, Bitcoin is really still the biggest coin in terms of volume, in terms of market cap, and lower volatility than other altcoins. So when you start seeing these drawdown periods and these volatile moments, usually for the diversification purposes and reducing risk, we tend to see higher allocations to Bitcoin. And another very interesting part and important part, by construction, since the all exchange index is looking at all the coins that are tradable on all the different exchanges, it's usually going to be the first index to start going to cash, going to mirrored equities like here, or going to Pax Gold. That's what we saw in November, December, because some of the exchanges, like Coinbase, for example, won't have as many options in terms of coins that are low volatility, coins that are negatively correlated to the market, mirrored assets, a lot of stable coins and things like that. So we usually start seeing the all exchange being the most conservative in terms of the first one to do so. And if you look at the performance of the all exchange and the statistics, you can see that the max drawdown of this specific index is around 30%, including the big drop from November and December, which really shows that it's very good in terms of risk-adjusted returns.
So if you want to play offense, right, it's usually KuCoin and Gate.io, right? Right. And I know like the more traditional approach might be to use Kraken, right? Because they have a lot of selection and be a big exchange. But if you want that early warning capability, we've seen it multiple times. I saw it last year before a 15% crash, right? That all exchange index will help protect you and will help manage risk, right? If you need to hedge or reduce positions. So does that sum it up?
Yeah, the way, yeah, that sums it up. And the way I like to really use the all exchange index, since I won't be able to trade all the coins every day on the all exchange because I don't have access to all the crypto exchanges, what I usually do as step one when I want to trade the indices, I would look at the all exchange to see what is the trend or what is going on in the crypto market as a whole. Am I seeing a lot of stable coins? Am I seeing some equity, mirrored equities, some gold, some things like that in the all exchange? And that will give me an idea on, okay, should I be more aggressive? Should I be more cautious? And so on. And then I move to the indices that I can trade. For example, the Kraken index or the KuCoin index has been performing well. And based off of that, I see the allocation of the index. If the all exchange is is very deep into high beta cryptos like Solana, Luna, and other altcoins, then I'll be aggressive in the index that I can trade. But when I see, like today, the all exchange index being in a stable coin and mirrored equities, a lot of Bitcoin, then I will be a little bit more cautious when I move to the index of my exchange and start trading. So I use the all exchange just to get an idea on, okay, what is the AI token metrics looking at, especially that it looks at the entire space compared to indices built on limited exchanges in terms of coins you can trade.
All right. Okay, folks. So in sum, right, there are indices for offense, right? There are also indices for offense and defense, right? That's the all exchange index, right? So at Token Metrics, we can help you trade up markets, ranges, and down markets using our indices. So on behalf of Jad, that's it for Quant Insights. We will see you next time.